Okay, we're recording.
Good morning, Rick. How are you doing?
I'm great, Sharon. How about yourself?
Good, good. So now that we have a lot of people getting ready, looking at their paperwork, looking at their taxes, and getting all ready for mortgage and the RSP and all that stuff, can you talk a little today about mortgage payments and the different types of payments, including accelerated and what it is and what the benefits are to that or not?
Sure. Well, most lenders are very flexible in how you make your payments. You can, pay with most lenders. You can choose a monthly payment, obviously. You can pay semi-monthly, which means twice a month. So usually like the 15th and the 30th or something like that. Or you can pay bi-weekly. Now, if you're paying bi-weekly, you have to realize that you're actually making 3 payments in a month 2 times a year. So you're
Right.
basically
Two
getting
extra
in
payments
exactly. So whereas
or
some
1 month extra.
yes. So
Yeah.
now if you're doing an accelerated biweekly payment, then you're making the same payments biweekly as you would be monthly, which means of course that you're essentially making 13 monthly payments a year as opposed to 12, which is
Right.
why it pays off your mortgage faster, which of course is going to save you interest. Now, I usually don't recommend the accelerated option. Like, sure, if you get paid every 2 weeks and you want to line up your payments with your paychecks, then, paying biweekly, great. But as far as the accelerated goes, it's at this point, interest rates are lower than inflation, and they have been for a while.
Yeah.
So I don't really see the rush in getting the mortgage paid off faster, because you have to realize that everything you do has an opportunity cost. So yes, and of course you also have the option with most lenders of making lump sum payments up to 20% of the original balance of the mortgage usually each year. So, if you really have a bunch of extra cash sitting around, you can always do the lump sum payment if you can't find a better use for it. And then also, it improves your cash flow situation, right? Now, of course, that requires discipline. A lot of people like doing the accelerated payments because they look at it sort of like forced savings, right? And they're putting more
But
money.
doesn't accelerated payments, especially like I'm going to take the aggressive approach and say accelerated weekly payments.
Sure.
So if we're doing accelerated weekly payments, doesn't the interest, like we're paying less interest right from that week, right? And the next week
Well, of
that goes
course.
down again.
Yeah,
So
because you're not paying, like you're paying it every week, so there's not like that full month accumulating.
yeah,
But so yeah, I mean, but as I said, like you can just do weekly payments as opposed to accelerated weekly. I'm more like, as I said, like I think it's more important because I don't think you're going to save that much just doing the weekly payments. It's the accelerated where you're making the extra payments that really makes a difference.
yeah.
And as I said, it's like basically you're paying more money. So of course you could also make a monthly payment and just elect to make a higher payment. You can shorten your amortization. That's essentially all that an accelerated payment is you're shortening your amortization, which of
Yeah.
course saves you money in interest. But you have to look at opportunity costs when you're doing this, because yes, you can pay down your mortgage faster, but you have to look. So when you look at investing, there's something referred to as the real rate of return. And
Yeah.
essentially you're looking at, well, what are the costs of the investment? And, what is the inflation rate? And so, for example, and how much taxes are you paying? So you deduct any costs off of your return, like selling the stock or something like that.
Yeah.
You would deduct the taxes that the CRA is going to take. So if you're in a high marginal tax bracket, for example, if you're earning interest, then if it's a non-registered investment, you could lose, like if you're getting, let's say 5% interest, you could be paying 2.5% of that interest in taxes. So you're really only getting 2.5%.
Right.
And then of course, if inflation is like 6% and you're getting 2.5% after taxes, you're losing buying power, right? Your rate of return is actually negative.
Yeah.
So you kind of have to look at it as the real rate of return. But of course, when you're the borrower and the rate of return, so when the inflation rate is higher than the interest rate, it's sort of like they're paying you to borrow money, really. So it's like, well, why are you in such a rush to get out of that? I mean, down the road, you can always, if interest rates go up higher than inflation, you can always switch to, paying down the mortgage faster. And obviously, you also have to look at, if you don't have a registered investment available, or a TFSA or something like that, then you can, consider, maybe, because I'm going to trigger taxes if I invest this money elsewhere, then, okay, maybe in that situation, you might be better off going with the accelerated payments. But for a lot of people, I think they'd be far better off seeing if they can top up their RSP, things like that, because it's like, well, and if you're a high income earner, an RSP contribution, because you're in a high marginal tax bracket, you could be saving almost 50 cents on every dollar you put into your RSP for retirement savings, for example. If you've got kids that are going to be going to post-secondary school, you could be contributing to the registered education savings plan, and the government's going to give you a 20% top up on that. So there's all sorts of examples of other things you could be doing with that money other than just paying down the debt on your mortgage. In fact, in some cases, you might be better off, just refinancing it to take an equity takeout and then use that money to, because you also have to look at investment. Time is your biggest friend. So the earlier you jumpstart your retirement savings, the better off you are. So it's one of those things. It's and also just cash flow. Like if you have a lower payment and then you have a tough month with a lot of unexpected expenses, it's much easier to handle that if you're just doing the regular payment. And as I said, if you've got a bunch of money sitting in your bank account, you can't figure out what you want to do, most lenders will offer the lump sum payment amount anyways. So I'm always like, well, if at the end of the year you want to, make an excess, like a balloon payment is what they refer to it as. You can always do that rather than if you find your expenses go up all of a sudden, now you're really struggling when you could have had a lower payment in the first place.
Yeah, money's a funny thing in how we look at it. I look at that, and if I had that money there for the balloon payment to make it at the end of the year, I don't want to do it because that's money now I've saved, and I want to keep, especially working when we don't have a regular income, right?
For sure.
But the other thing is too, I look at it and I like say for me, I look at as you know, I won't even carry a credit card debt. But I do have a very small mortgage, but that mortgage is at 2.09%. So
that's an amazing rate right now.
For me, I've still got another 4 years on that mortgage, and that's a fixed rate too. So, so I got, and that's the first time I've taken fixed rate in many, many years. And I got at 2.09. I was like, yeah, I'm taking fixed. I can't do better than this where the market is going. And it hadn't started to go up at that time. But I look at it now and I'm thinking, wow, well, I don't know what I'm going to be paying in 4 years. So personally, I pay the accelerated weekly, and I because I've got the 2.09, and then I top it up a little bit on top of that, just because for me, ideally, I should be comfortable keeping it even as a part of a write-off from my home office and all of that stuff. But at the same time, having gotten, 3 kids, still getting them on their feet, quite honestly, and in varying stages. So there's a lot of responsibility, right, in real time. So I'm looking at it and going, well, you know what? At least if I can pay that extra so much per week, and I'm doing the weekly, if I do have money at the end of the year, great, I can decide what to do with it. But then I can do other things with it because I like to go pay cash for my car and I don't want to lease it. So now, for me, that's not the best way to get the maximum value out of the dollar. I just have an aversion to expenses and to debt.
Well, there is certainly bad debt. Like if you're borrowing money for lifestyle expenses, then that's not good. But your house is an investment. So first of all, that's good debt, because if you have to, pay rent somewhere else, you're just paying someone else's mortgage anyways. And of course, over time, your monthly payments for your mortgage, it all depends on what happens with interest rates, but usually you end up paying much less per month after you've been there for 10 or 15 years than if you were renting somewhere else, right? Especially if you have to break your lease and move elsewhere. And
I wouldn't be able to take rent out there. What I'm paying for my mortgage is I don't think I'm going to be moving anywhere.
Now, having said that, there is bad debt. Certainly,
Yeah.
if you're carrying debt on credit cards, you certainly want to pay that off, and you certainly want to pay that off long before you accelerate payments on your mortgage or make balloon payments on your mortgage. Because I mean, we're often talking like 20-30% interest rates on credit card debt. So yes, that's a totally different story. I'm not saying, you should carry credit card debt so you can make
and that's a
RSP.
different debt and a different way to handle it. Then you get into a snowball effect where you pay off those smaller debts with that highest interest rates and keep going.
For sure. So it's an entirely different ballgame. But if you could get debt at mortgage interest rate levels, then sure. But I mean, yeah, you're looking at as I said, currently you're maybe paying 4.5-5% if you got a mortgage recently, but inflation is still higher than that, right? So
yeah,
like what is the big rush to pay that down? I don't see it. As I said,
it depends how many kids you still got under your apron and how close you are to retirement and what you didn't save in an RSP, right? Because a lot are not in that place where these things are not established in their lives.
Mm-hmm.
So I guess it's one thing you can control a little bit, I guess, to a point.
Well, yes, but I mean, you can control that because you can start your RSP. The last thing you want to do is put off retirement planning, because the longer you wait, the tougher it's going to be. So it's, you want to, I mean, that's, if you can get someone else's money working for you, it makes no sense why you wouldn't, right? Like, right. You could,
and especially say with the RSP, because you can turn around and use that for down payment on the house anyway.
Well, if you're a first-time buyer, you can, yes.
Yeah.
But so that just and a first-time buyer doesn't necessarily mean that you've never owned a house before. It's 4 years without living in a house owned by your current spouse, or 4 years since you've owned a house. But yes, I mean, if you're paying down a mortgage, I'm assuming that it's because you own a house.
Yeah.
It's one of those things, like, as I said, like, how are you going to beat, like, right off the bat, you're getting your taxes back, right? So even if you're in a lower income and you're getting like, 27% or something like that off your RSP refund, I mean, versus paying, 4% interest or something. And I mean, you could, of course, if you wanted to, you could take that tax refund, assuming you've been tax at source, and then use that to make a balloon payment on your mortgage. But it's like, well, if you still have RSP contribution room or TFSA room, you could also put it in that, right? So, maybe if, like, for example, you don't like paying interest on your car loan, which, by the way, Sharon, it's not a terrible thing when you're self-employed, because you can write off the interest payments.
It's not. It's just me personally. That's all.
Yeah. And the other thing I should mention is that with the accelerated payments, the difference is going directly to the principal. So it doesn't actually increase your tax write-off, because the only part you can write off for taxes for the home use of office is the interest portion. So it's
it's a way. It's certainly, and and I understand. I'm just throwing the other side of the coin at you. That's all.
No, there's a lot of people with an aversion to debt, and for certain types of debt, that is certainly true. Like, you should not, borrow money to go buy a nice big screen TV. Some of these vendors of furnishings and things like that, and it's like no money down, no payments for however many months or whatever. But you go one day over that, and boom, you just got nailed with all those interest payments and charges and fees, and now you're going to pay 3 times as much for that piece of furniture or that TV or whatever. And it's like, well, if you just waited and saved and maybe gotten it on sale somewhere. So basically, long story short, everything has an opportunity cost. You really need to evaluate the cost benefits of every choice. And I think a lot of people, when they are looking at an accelerated mortgage payment, they're like, this is going to save me money, so that's a great idea. And it's like, yes, saving money is always good, but maybe you could do better.
Save it smarter.
Option. So.
And I think, Rick, that's where the beauty of having that financial planning experience along with the mortgage experience It's a nice marriage between the two, right? So that,
I think so.
yeah, either you do is good, but which one earns you the best return at the end of the day?
It's certainly better to pay your mortgage off faster than taking an extra vacation or whatever. I
Yeah.
mean, the extra
Yeah.
vacation, yes, maybe that'll be good for your mental health and so forth.
Yeah.
But if we're strictly evaluating it from a financial health standpoint, not necessarily your best choice.
Yeah. Yeah.
So
very true. Very true. I had I'm gonna tell you, I had I mean, as you know, I like to pay cash for everything, and even with credit cards, when I with each of my kids, once they got to 18 and they could have their own credit card, and got them, set up on a credit card, and it wasn't big amounts to begin with. But I have a policy that anything I use my credit card for, the cash has to be in my account.
So you're a good policy.
So that I can pay it off. And I noticed that with all three of my kids, they do the same thing. They will now, if they go do something, they come home and they pay it off. They use a credit card for the benefit of it and the convenience, but there is never something that they carry forward month to month. And it's not one of those things that I even realized that I had even said much about, right? But all three of them have had a credit card as teenagers, and they won't carry a debt on it.
Yeah, well, I mean, it's a great way to get yourself behind the 8 ball if you just start going crazy on your credit cards like there's no tomorrow, because tomorrow usually comes, and that credit card bill, if you don't have the money to pay for it, 30% interest, it's
it can wipe you out
for sure.
Yeah. But anyway, Rick, that's a lot. Thank you. I know we pull in a few of those bunny trails there, but I think it's important because it's getting a more whole picture of your finances and how they work for you and how your mortgage works for you, and tying the pieces in. And of course, I want to say at this point that for anyone watching this that have financial planning concerns, want to know about the RSP, we get all of this covered here. So you can reach out to Rick, and he'd be happy to walk you through that and help work out the best strategy for your life.
And if you have any thoughts on this, drop a comment in the section below, and we'll get back to you.
We sure will. Thank you so much, Rick.
Thanks,
have an
Sharon.
amazing day.
Always a pleasure. You too. How do I stop the recording? Oh, there it is.